Dear guests, the following discussion makes us wonder, what's next? With the prop trading world and APAC undergoing a seismic shift, please join me in welcoming three exceptional experts on stage, sharing what's driving the new competitive edge. Let's welcome on stage our moderator, Markus Sichler, co-founder and strategic advisor at your prop firm, who will introduce us to an exceptional group of experts.
So, hello everyone, I hope you're doing well. Welcome to the panel at IFIX Expo Asia 2025, Quant Wars, Crypto Moves, the Prop Trading Shakeup. My name is Markus Sichler, co-founder of your prop firm, and I have the honor of moderating this panel alongside experts and visionaries in the prop trading industry. We have many familiar faces on our panel, but for those who don't know you, please introduce yourself on who you are and what you're doing in the prop trading industry.
Thank you, Marcus. Hello, guys. My name is Calvin, and I'm from XC, heading the China business. So for the guys who doesn't know about XC, basically we are not 100% prop firm, but we are acting as a CFD broker. It's just that about 2 years ago, we have this XC Select program, which we focus on prop trading, and we get a lot of attention from the market. So this is, I think it's a good chance to present me and XC to the audience. Thank you.
Great.
Hello, everyone. My name is Bobby Winters. I'm co-founder of Effexify, one of the leading prop firms in the space, as well as Group COO of Alchemy Markets and Zawala, which is a retail brokerage and a Swedish EMI that does banking and payments.
Hello, everyone. My name is Gil Ben-Hur. I'm an old veteran in the prop firm industry. Since 2016, we established the Fivers and also Trade Pool, which is a prop firm, I think the only prop firm for US stocks.
Hi, everybody. My name is Andrei Kalashnikov. I'm head of Match to Pay, part of the Match Trade Group Technologies. So we do a lot of white labels for props and Forex, and I'm representing specifically the crypto gateways, basically, for the props and Forex companies.
Hello, everyone. My name is Andreas. I'm leading operations for FunderPro, both B2C and B2B prop firm. B2C, CFD and futures, we offer the service of prop trading to retail traders, and we also built our technology in-house, so we serve a B2B other firms that want to launch their own prop firm.
Great, perfect. Thank you. So to start with, I think we can all agree that prop trading is one of the most dynamic and fastest growing areas in finance and in the trading space. Especially APAC is leading the growth curve, driven by a young, mobile-first trader base. Over the last few months, we've seen many new prop firms launch and many others closing down. The industry is becoming both more competitive and more mature, with clear standards and better practices. But at the same time, fraud and abuse are also rising, pushing firms to tighten controls and implement stronger risk protocols. So in a market where speed and precision drive returns, talent matters as much as capital. The most agile firms are rethinking their models to stay ahead. So today in this panel, we have experts both from the B2C side, so actually founders and executives who are running prop firms on a day-to-day, and actually also B2B service providers who helping prop trading firms to succeed. So we have 7 points that we're going over, and after we have spared some time for questions from the audience. And my goal is to give everyone here actionable insights, useful data, and a clear outlook on where prop trading is headed. So let us directly jump into it. So the first point is the APAC landscape. So I'm directing this question to everyone. What are your observations of the prop trading industry in APAC? which countries have been the main growth drivers, and what are your expectations for the future? Sure.
Okay. Okay, for our program, Axis Select, we have been operated for 2 years. And for the last 2 years, we managed to attract about more than 30,000 active clients. And we pay out about $9 million performance fees to the traders. And among those, all the figures, at least 50% is coming from APAC. And we found that APAC is very important because a lot of countries, the traders, they might not be able to deposit in big amount. So the benefit of prop trading is to give them extra funds so that they can manage their risk and that they can see a significant profit. If they are making like at least 5% or 10% and monthly return, they can see some real money coming in from that. So I think Asia, especially for China, we are getting about 2,000 new active clients every month. And the other regions like Vietnam and Thailand are also our key markets.
Yeah, for Asia, we see definitely huge growth. I do agree on the points where, it gives a lot more opportunity for traders that may not have the same amount of capital that they can get in a prop trading account. We've seen huge growth in Thailand, Vietnam, Malaysia, Indonesia, just to name a few. We don't do as much in China, actually, which is interesting to hear on your side, but I know you have a big, book of business there on the brokerage side. But I do think this is going to continue to grow, especially in these regions, and be a very big driver for prop firms.
Same here. Asia is growing very fast. We're seeing this in the past few years now. India, Vietnam, Thailand, you name it, Philippines, everywhere, Asia, they're just hooked to prop firms. I think it's more because of we're providing a lot of education. They are very keen to learn and to master the trading profession. They are also very sophisticated people using a lot of automations, and they are really enjoying the community that we're providing and the whole infrastructure for catering traders. And I think prop firms is really the right spot for them I think anywhere, but the prop firms are providing a lot of opportunities to many retailers and household people that looking for the opportunity to make it financially independent, and so many people in Asia are up to it.
Well, from our side, Match Trade Technologies, and on the Match to Pay side, we have a bigger picture, I would say, than more B2C companies. We service over 90 different brokers on prop firms, actually. So we have a wider picture of that, and we see definitely specific countries such as India, Malaysia, South Korea actually being quite well, specifically in that order, actually. India being as the biggest adopter in terms of crypto for prop firms and for crypto deposits as well, followed by Malaysia, maybe Indonesia and South Korea, kind of like on a third and fourth place. And I would say out of the worldwide region, APAC is leading in crypto in general, specifically in prop firms. If you compare it to Forex, it's also like double the amount compared to the Forex in APAC as well. So APAC is definitely leading, I would say, to focus mainly on the Indian and the Malaysian, Indonesian countries, I would say.
Yeah, I agree with everything the guys said. I think South Asia, India, Pakistan have definitely had more movement for us. Eastern Asia, like Japan, is picking up slowly, but it has been slower. I'm surprised to hear the numbers from Axie's side, Kelvin, about Asia having so many users, because for us it's been mainly Europe and MENA, with also LATAM picking up lately. APAC has been the slower one, but yeah, we're going to focus on East Asia now because Japan definitely has a lot of potential.
Perfect. Very insightful. So let's talk about quantitative and algorithmic trading strategies. So we've seen a rise in traders using algorithmic trading strategies. So from your perspective, how is the rise of quantitative and algorithmic trading strategies impacting prop firms? Maybe we start from the right side.
Yeah, sure, nice. So in terms of algo trading, from the trader side, obviously you need to be very careful because there are, like most prop firms that I know, they don't allow copy trading, right? So if there's one person sharing an algo and everybody's using the same strategy, then possibly you end up passing the challenge with someone else's algo and you find out that someone else is also using it and you do get disqualified. So you have to be very careful. Some prop firms I know, they also request the code for the algo so that you need to prove that it's your own, you built it yourself. And as far as it goes for Quant, from the business side at least, I know that it's a must now to be able to understand statistics of traders to know who to hedge to the market, because at a scale of so many users, you can't actually understand how many people are passing these challenges, at what rate, how many lots they're trading, are they consistent enough. Many traders, they focus a lot on getting their first payout in order to get that first refund, and then after that they just loosen down. So all these insights, you really need to have some quant analysts and people that actually understand the numbers to be able to provide value.
Yeah, I would agree that quant is a dangerous game to play for prop firms, to be honest, because if you have the whole point for prop firms is to attract different talent, different traders, to diversify your risk, to have different strategies basically for you to follow and to remunerate your traders for. You could have it, you can focus it, but I wouldn't say it was the main focus for prop firms, because you would have to have very good risk management as well in place for the liquidity side and so on. So it's useful. You could use it. You could capitalize on it, but I wouldn't have it as a main focus unless you have very good risk management team.
Algo trading is we're seeing it growing over. We permitted it from day one, but we always specify that we want traders to be genuine, and anyone that is want to trade with algo, we want him to know that we want to make sure that he knows what's the algorithm behind it, what's the logic, the trading logic. And in the past years, we're seeing more and more people buying black boxes and trying out, playing around with it and see if they can pass challenges with it. So we need to, chase these traders. We see a lot of coordinated groups coming along with automations and try to disguise themselves as algo traders. And so we need to put our risk team into the job of finding the genuine traders, which we're truly seeking. The thing is that you need to have a whole operation and technology in order to mitigate this specific issue. But the bigger the company is, the more it's able to contain this type of trading, and we welcome it.
Yeah, on our side, we do accept algorithmic trading. We have MT4, MT5, we have DX Trade and TradingView. So there's a multitude of different ways you can have an automated strategy with us. We take the approach that we do want to audit a strategy beforehand, because I think the spirit of prop is it is you trading for yourself with your own unique ideas. Now, we do understand at the same time, like, other people have said here, that, people try and buy a strategy to, obviously pass a prop firm if they don't have confidence in their own. It's thankfully we come from a brokerage background. We have a lot of the risk systems in control already. We've seen it on the brokerage side as well, and it's something that I think we mitigate very, very well, and we enable clients that are doing things properly.
Yeah, in XC, we support all kind of trading, whether it's manual trading, algo, quant trading. Because once the traders get funds from us, more and more, their trades will be passed to the market. And once they make profit from that, we are making profits from the market as well. So it's we are some kind of on the same boat. And the only thing I agree with Andre is you need to make sure that the algo you are using is the unique one in our trading society. Otherwise, if one single signal is being copied by a lot of followers. Imagine in the real market, the accounts will be slipped. There might not be enough liquidity in the market. So eventually a lot of investors or followers copy the signal will be making the loss. So we welcome EA and algo trading in our XC society. It's just that you need to make sure your algo is the unique one.
Perfect. So for the next topic, let's talk about crypto's role. So how has the crypto market affected the prop trading industries? And how much volume is actually traded in the crypto market? And then what other assets do you see rising, right? We've seen a lot of rise on futures prop firms. We might see the same for crypto and maybe other assets like options, right? So what is your take on that? Maybe start from the left now.
Crypto, as an entire broker, crypto takes about 10% of Axis trading volume. And we are seeing more and more trend that people are trading not only on the spot cryptos, but they are also focusing on perps, which is the perpetual futures contract. And we are offering on that on our platform as well. And we are seeing a lot of CFD brokers, they are targeting into the perps market. So we believe that that's going to be a very popular product, rather because at the moment, I would say 90% of the clients, maybe in Asia, they are still focusing on gold, but eventually the trend will be changing to perps.
And would you say that crypto, it's more a cyclical market?
Maybe gold at the moment.
Yeah, on our side, we've seen large demand for crypto, so much that we've actually just launched this week crypto-only plans, and doing that as a unique segment compared to just typical FX CFDs and then a CFD on crypto. It does make up a large amount of our volume. Obviously, gold is probably the most volume you're seeing in the market over the past year at least. But we do want to kind of cater to that segment. You look at what Kraken did buying NinjaTrader. They're coming into the space very, as we all know. And, you know, we wanted to be a bit ahead of the curve to offer some new plans for clients which are specifically crypto focused. And we're really excited for it.
In the Fivers, it took us time to onboard cryptos because we realized that crypto has different dynamic in trading. It practically has a different personality, different behavior, different ranges, and it was very tough to try and frame crypto volatility into the CFD programs that we have. Eventually, we allowed it, taking inspiration from other prop firms onboarding cryptos, the main ones, Bitcoin and Ethereum. And so we allowing now today crypto in a very low margin, just in case. But I agree with you that crypto should have a specific program because it has different nature. Regarding other assets, future is rising and many companies are stepping into this field. And like I mentioned before, it's almost never mentioned because there's not much competition currently on this space. But the US stocks, we have Traded Pool, which is I think the only true stocks prop firm. We serve 12,000 assets from the US markets, and it's a growing thing as well.
Regarding crypto for the trading volume, clearly from Match to Pay side on the crypto gateway, we don't see that, but due to the Match Trade Technologies group with Match Prime, etc., we do have a bigger picture in Forex and in the crypto side, since we do provide liquidity on both ends, actually. We do see crypto more as a caveat that is maybe given to clients to attract them. But in terms of trading volume, it's maybe like 1%, actually. Majority is taken over by the majors and the gold. And as you mentioned, it is in a cycle. For example, last year, it was much more than it is this year. It all depends, on the market news, what's going on, etc. So in terms of specifically trading, not as relevant, I would say, as more crypto deposits that we see is rising dramatically, specifically on the APAC and APAC region, where you would have, for example, in Europe, you might have 5 to 7% in crypto deposits, while in APAC it could range 20 to 40. And we've recently actually seen prop firms specifically focus on crypto only, where it's crypto deposits and nothing else, due to the difficulties that crypto firms are sometimes having with payments by getting rejected, being put as high risk, etc. So they're trying to focus more on a crypto deposit to avoid that and have a smoother running business basically for them. This is a trend that we see more on the crypto side, I would say, than trading.
Yeah, so from all asset classes, I'm a huge futures fan. I started in futures props 4 years ago, and I think overall it's managed to keep a much more solid offering in terms of consistency. CFDs happen to be like the Wild West at some point. Everybody was trying to get market share, dropping prices, dropping profit targets, maximizing their drawdowns. And that's why I think we've seen many CFD firms actually shut down, because everybody was trying to acquire market share without actually understanding what it meant from the risk side. Futures has managed to stay solid, which I think you would agree on is very good for a prop firm. And as far as crypto goes, I was talking with our guys yesterday. So we have, I think, 20% of our users are trading crypto, and it only the volume is only at 2%. So that means that they're taking less trades when they're trading crypto. Obviously, the spreads are higher, and the market is a lot more volatile. So they try to take less trades and take bigger profits in that one trade.
Perfect. So let's talk about from the B2B perspective about payments. So prop firms often face issues with payment providers due to the nature of the business. At the moment, prop trading is not really clearly regulated. It's somehow unclear space. So how are payments and payouts impacting firms, and what solutions help mitigate those challenges? Maybe Andrew, since you're the expert from the B2B side.
I touched that a bit on the trading side as well. So as I was mentioning, the prop firms are more going into the crypto deposits just because they're having difficulties on other payment solutions. If you were talking about 3 years ago, it was easy to get checkout, any other PSP, put you on the low risk category, you pay only 2-3%, very easy to entry, etc. Now, due to the boom of the crypto and seeing the risks from the PSP side, they're getting either rejected, or then they're getting their funds frozen, there's chargebacks, etc., etc. So it's not like it's not possible to get PSP right now. It's still there. It's just maybe higher costs now, closer to the Forex industry, I would say. And slowly they're moving to the crypto firm, especially on the APAC. We've had some prop firms actually recently that are 100% crypto deposits, because they want to avoid those chargebacks, those issues, and especially if they're focused on APAC, it makes it much easier for them. That's why we see a bigger rise in India, for example, and Malaysia for the crypto deposits, and it just makes it more simpler and easier for them to operate. Also reducing their costs dramatically. I mean, if you're talking about crypto, it's between 0.4 to 1%, depending on the provider, while Visa and MasterCard is like 4 to 5%, etc. As well on the payouts, it helps out on the payouts, because there you don't have to rely on the banking, you don't have to rely on the Visa and MasterCard. On a crypto, you can have unlimited amount that you can send over and do payouts to your clients seamlessly, instantly, etc. So it's going to get even just more used, I would say, through the next year or two, for sure.
I might hop in on this one next. So we took an interesting approach because we've been running brokerages for the past 9-10 years, and we've always realized that payments were a problem even in the brokerage space. So about 2.5 years ago, we got a license, an EMI license in Sweden. The company is called Zawala, and we are doing banking. We have crypto licenses for having crypto rails through Poland and Isle of Man, and we're principals with Visa and MasterCard so that we can actually control all of our payments in and out, both for our brokerages and for our prop firms. And anybody here that maybe needs some payment solutions, you guys can come message me anytime. And on top of that, our next iteration that we want to do is we're going to offer payouts via branded debit card, as we have a debit card program as well. And we want to use that kind of as the next certificate for when a funded trader passes a challenge, to really show that I'm a funded trader and here, watch, I can go and pay and do this. I have a card in my pocket, I won't take it out now. But we see payments being extremely important, and that's why we took the steps to set this up so that we can control and have it from payment in to payment out and do it seamlessly.
I don't want to brag, but we never had issues with payment solutions. We have Visa, MasterCard, everything. There's a growing need for crypto. We know that, and we serve that as well. I don't know, is that the thing with the cards? People like it because we introduced this a year ago and nobody took it.
So, I mean, we're going to try. We're just launching it now. I think it depends on regionally as well, right? And we'll do virtual cards soon, which I think will be a lot easier, just on your phone and go pass and pay. But it's also really, really great for branding. So,
yeah, it was very disappointing because we put a lot of effort building this solution. Nobody wanted it. They were excited, but they didn't take it. Anyway, payout is more an issue. We used to work with Deal, and they withdraw from our industry. So we had to settle for different solutions. But now, and so we're using a lot of payouts using crypto. And we're using different distributors, also PayPal. I think the thing to own, to be okay with payment solutions is to provide good value to your traders, because if you give good value, therefore you have less chargebacks, and then you have a good tracking records, and with that tracking records you can show that tracking to different providers, and then they are willing to onboard you. And so, this is my 2 cents for everyone. Just give a great service and try to get the best satisfaction rate, and that will work.
Perfect. Thank you for the insights. So for the lack of time, I want to jump to the next topic. We mentioned chargebacks. So the next point will be fraud and abuse, right? So we've seen more fraud and abuse happening in the industry. There's more group trading, like targeted groups that attacking certain prop trading firms, leveraging their audiences. So for me, it's interesting, and I'm sure for the audience as well. So how do fraud and abuse impact prop firms, and how can firms really respond, but without unfairly penalizing actually the profitable traders that have a genuine profitable strategy? So maybe we're starting from the left.
Yeah, the most common fraud or abuse we've seen is there are two types. One is copy trading. So although we emphasize to our partners, IBs, that we allow EA and algo trading, and you need to make sure this is the unique one. Otherwise, if your account has been copied, we'll ban the signals and the followers at the same time. I think the other type of abuse, which is pretty common, is match trading or hedging. So we have seen a lot of clients, they open massive number of accounts, and they just do opposite directions on half of the account, long and short, to make sure half the accounts getting benefit and the other half just make it stop loss. So inside our XC environment, we have built up our own system in order to detect those abusers, match trading or copy trading. But we find it is pretty hard to manage or to monitor if, let's say, they are using one Axis account to do one direction and maybe use another prop firm to trade on the opposite direction. So I think it's a common fraud, but might be experienced by other guys as well. So probably I would leave these questions to other professionals to answer that.
Yeah, I can go next. Yeah, yeah. The seat has its disadvantages. So yeah, definitely like you mentioned, the fraud and abuse is definitely the biggest Achilles heel of prop trading, and you need to make sure that you have all the right tools in place to be able to check for copy trading, for hedging. Now, obviously, without penalizing all traders, I think every prop firm would like to sell a product with no rules to be able to obviously get bigger market share and hope that the traders would respect the fact that the prop firm is putting their capital up front. Unfortunately, we saw that that's not happening. Many traders come through, they're trying to just at any cost make profits and leverage the firm's capital. So there are tools coming out now, which is very good, where I think many prop firms will be able to connect onto something more centralized, so then we can somehow find people that are hedging across prop firms.
Well, the centralized part, I would say, if you're a provider such as ourselves for various brokers and prop firms, we have vast data and information as to if they're trading between different entities as well, with different prop firms. So with Match Prime and Match Trade, we got that covered pretty well for all of our clients, and we really don't have an issue with that, finding abusers in that respect. But I would say from the crypto side, there is actually abuse or potential abuse that we protect our clients from as well, prop firms, is sometimes traders or clients would want to make a deposit in USDT, which is usually a fake coin in USDT that looks very similar, etc. But they try to send something to try to basically confuse the prop firms and try to get funded with a cheap token that doesn't really exist, more like a scam token. So we have that in place as well to protect our clients even from the deposit side from fraud.
Abusement is an issue in our industry, and we tackle this with 3 tiers. One is policy and operation, technology, and maybe it's going to be surprising to some, but marketing. Why marketing? Because we always looking for the fine balance between enforcing policy and looking after our reputation. The more you enforce on abusers, then they will attack you back on your reputation, which is our sweet spot. And so what we're trying to achieve is to contain the abusement as much as possible. And for that, we want to create more genuine traders in our whole operation, so they will blend with the abusers, and so we can tackle the abusers more specifically. So we're doing a lot of marketing as a prevention for abusement, and so it will take less effect on our overall performance.
On our side, I think all the answers were honestly spot on here. I think the only thing I'll add to chime in is maybe having a diverse set of different plans with different targets. A lot of the firms are offering very, very unique plans, very similar plans, right, that have, max drawdown of this or static and things like that, where I think that leads to more abuse. So sometimes having slightly different rules on your prop firm challenges can mitigate some of that, but it's a slippery slope, and you have to have a very, very good risk team, operations, etc., to be prepared for it overall.
May I add something? This is an opportunity where we all sit here together. One thing regarding abusement, it happens because the industry is not coordinated. The traders are, and we're not. The fact that we're all offering the same programs, that makes it easier for coordinated traders to come along and try to and work out with different. They'll go to you and me and him, and we'll do something, find arbitrages in the industry itself. So we're trying to initiate some ethic or some coordination among the companies. It's it's not about sharing information about traders, but it's being more coordinated and attacking the abusement issue, which affects all of us in a more coordinated cross-industry way. So I welcome everyone to contact me and try to, pull something out.
Definitely, I think with match trade technologies, we have a better control of our brokers. So if you have something in mind, definitely we can look into it and discuss it for sure.
Perfect. So for the lack of time, we skipping now to the last question. So I think the most important for prop firms is staying competitive in a super competitive market. So I would like to ask, from your perspective, what can prop firms do to remain competitive and future-proof their models while still offering attractive value to their traders?
I can go first. I mean, I think it's what I said before. We need to make sure that when trying to acquire market share and become competitive, we don't actually undermine the risk on it, because that's what happened, and that's why we're seeing firms close on their attempt to get market share. They get too competitive. So at some point, I think due to the lack of regulation in the space, the only way you can, let's say, validate your firm is by actually paying out your clients and having them talk for you. So like I agree with what Gil said. I think we should all just understand what the standard numbers are in terms of targets and drawdowns and try and coordinate amongst ourselves so we create a future-proof market on this.
I couldn't add anything more. I mean, it's spot on.
Well, competition is tough because I think in the past years we're seeing more companies being aligned on the very same program, and it's offering more of the same. And we're talking about abusement in the last topic, and this is the reason why we are subject to abusement. I would like to see more companies creating different programs and introducing more models to being evaluated. That's one thing, and that will create diversity and will create a healthier industry. That's one thing. The other thing for competition, I think the best practice that we do is we're always trying to provide high value for our traders. We want to provide them a holistic experience. It's not just being evaluated and being funded. It's about the education and the progression and building the trading skill and making them prepared for trading their own or being independent in trading. So this is what we're aiming, and so we're building communities, we're building education, we're building all sort of more enhancers for the training progression. So the more the traders are happy, the more the brand gains integrity, and that's our weapon.
Yeah, I think we've seen like the past year, especially or 2 years, like a lot of new entrants coming in. They've done a race to the bottom on cost. Number one, we've seen just crazy discounts or really plans, I would say, that don't make sense as far as the rules that are going on because they're trying to win market share. I mean, we've all been around for some time where our rules, I think, are very, very fair, but are challenging for traders and things like that. From our side, we're trying to find different enhancements for our traders as we do also run brokers. One of the plans that we want to do is kind of flip the switch on, say, scaling, which I think scaling is a great thing overall, which is just when a trader is successful that they get more capital. We're launching a program to kind of try and legitimize things further, where if you're a good trader and you're selected by us and you're showing proper risk management, not just the guy trying to hit one home run and get a payout, we'll actually feature you on our a brokerage for copy trading, which is not linked to the Effexify brand, but to give even, say, traders at a brokerage the opportunity to say, hey, these guys have been selected as great traders, and now I want to follow them on the brokerage side, and they'll be able to charge a performance and management fee for that, which we're in a unique spot to offer because we're both a broker and have the prop firm as well.
Yeah, the prop model we are running is slightly different than the traditional way of prop firms, that we are using live accounts to trade, and also we don't charge any registration fees from traders. So I think in order to increase our competitiveness in the market is how to balance our risk management to prevent those fraud or abusers, and also at the same time how to take the market shares by setting the proper rules, how to set the performance fees and increase the deposit amounts, etc. So I think the balancing is the key point for every prop firms.
Perfect. So we're coming to the end with our time limit of this panel. There was a lot of great insights. I just want to ask, do we have a few more minutes for asking questions? Or are we... Yeah, perfect. So we have a few minutes for asking questions from the audience. So if anyone... Yes?
Hi, hello. Not sure who question might be addressed to, maybe Bobby Winters or Gil Ben-Hur. So I've been a trader myself for the past 5 years. I do it as a, we can say, side gig. So my main profession is I'm an educator. So I do it in my free time. So yeah, I've been trading for 5 years, and last year been profitable for me. I would say I've been on a consistent path. So question is, like, what would maybe prop firms or what would companies, funds would look into? Like what stats, what metrics, how would they, how could I step it up and be more serious in that field? Like what would prop firm would look into in the trader, into the trading? What metrics would they look into? Can I?
So I think risk per trade, definitely. Be careful with the risk per trade. No one wants to see you just going and how much margin you use. So something we definitely look at is we don't want people to go crazy just because it's not their funds, right? People are taking advantage of the amount that you can get for the amount that you actually put in. So just, I wouldn't go above like 50% of the margin in your trade. Don't, you're laughing because you know you shouldn't do that anyway.
No, definitely. Yeah. My risk per trade is like maximum 3%.
You would be surprised what we see on the back end. So yeah, don't use all of your margin and keep your risk per trade short, just so you can prove to the prop firm that you do understand when you've taken a bad trade, and you don't just leave it open until it hits the loss, hoping that it's going to swing back and make you a huge amount of profits. That would be my 2 cents.
Right. Thank you.
Well, first, it seems that you're doing great, so that's great. It's uncommon to have consistent traders on CFDs. I've been a trader myself. I know how it feels. This is why we created this business. There's a lot of misconception of what is a trader, and a lot of newcomers traders think that if they do their checklist, they will be succeeding. I think trading is a performance profession. It's very individual. You have to learn yourself how you cope with the market and what the markets get you through, you know, emotionally and performance. You have to find your strategy. You have to find your risk management. You have to be aligned with yourself. In the movies, you see traders that are very neurotic. It's not the true thing. If you are a true trader, you're a Zen. You're in the zone. You're quiet and you're mindful for the job. And you seem like that type of person, so that's why you're probably consistent.
And if I was to do real quick, I know we're like over on time. So we're gonna, when we're doing our kind of like path to asset manager for like the copy trading thing that we want to offer, obviously risk management number one, not trading a prop account where you're just trying to incrementally win it. I think you're doing a little bit different. We're also going to look into things like Sharpe ratios and different statistics that a hedge fund would approach for what they're saying for, hey, is this a good trade or not?
Yeah, sorry. Can you elaborate a little bit more on this? Like you mentioned Sharpe ratio, like just very briefly.
I mean, if I was looking at a Sharpe ratio, I'd, you know, like as a standard is always going to be above one, right? Is kind of a general one. It's very fundamentally based on kind of how many trades you're placing, different things like that. But I don't want to take up more time here. I'll sit and talk to you right after a bit on more on that any time. So yeah, appreciate the question though.
Sure. Thank you.
Perfect. So I think we had great insights, a lot of interesting points. We overrunning on the time, I think already a couple minutes. So yeah, thanks everyone for joining. It was a great session. And yeah, hope everyone had great insights.
Thank you.
Thank you.
Thank you very much.
Everybody.